What's going on, guys? We're back with another video in the expert guide. Today we're talking about moving average convergence divergence, also known as MACD, moving average convergence divergence. This is another pretty good one. I use it a lot. It's very similar to the moving average as far as the signals, but also it gives you a couple more signals. So let me go ahead and show you where to find that. Indicators, just type in MACD. I got it abbreviated for you. So here it is, right? Okay, so there's two lines. The green line here is the MACD line. That's the moving average convergence divergence line, and that is just two exponential moving averages. In this case, it's a 20-day and a 10-day. So they take the 20-day, subtracted from the 10-day. Did some other math there. That's not too crucial to know. But yeah, this is just a moving average. And then this is another moving average, except it's a 10-period moving average, and that's used as a signal line, right? Okay. So also there's this histogram here. This just lets you know how the distance between these lines. So as you can see, when it crosses here, there's no distance, right? Right after it shows you that there's a slight little distance, but that's where it crosses and it's at 0. Here you can see there's a large distance. That's actually the largest distance in that area. Another large distance between it, another cross. So it just shows you the the distance. And since the green is above the red line, the histogram shows that in the positive area. When the green is below, it shows it in the negative area. So yeah, I think that's pretty self-explanatory there now. So the MACD, what it does is it shows the momentum for the most part. So let me go ahead and modify this so where you just see the MACD rather than seeing that other line. So this is the MACD line, and this here is the 0 line, right? Let me go ahead and put a line there at 0. All right, so that's the 0 line right here. Now, like I told you, that deals with the 20 and the 10 estimated, exponential moving average. So let's just go ahead and put 2 of those up. All right, we're gonna make one white. That's gonna be 10. And then we're gonna make the other one 20. All right. So as you can see, every time these lines cross, in this case, our quicker line, which is the 10, every time it crosses, it goes up above the 20-day moving average. The MACD goes above 0. When it goes below, the MACD goes below 0. So it just follows that trend just like that. Also, it shows the momentum of the graph. So as you can see, when it crosses down below 0, it's showing that there's a heavy momentum in the negative, or an increasing momentum in the negative direction. As you can see, the price continues to drop. Crosses above, increasing momentum in the positive direction. Price is rising. Same thing when it goes below, drops again, rises, and so forth and so forth. You can see that here. All right? Okay, so let me put this back to how it was. And let me go ahead and remove these here. So now let me explain that signal line that I was telling y'all about, this red line. And this gives you buy and sell signals. So for example, let's just go back here. Okay. So when you see the green, which is the MACD, pass above that signal line, that gives you a buy signal. So let's just say you bought at this point when it crossed above. You'd have saw a gain up until, from here to here, up until this point when it tells you to sell, and you would have sold. Up until this point, you buy again, buy, sell. That would have been a bad signal there. Like I said, I always give it a couple of days, or I always use several signals. I never just go off of just one signal. But as you can see, here's another buy and sell signal, a good sell signal, because the next buy signal is way down here, and that's even a bad buy signal. The next good buy signal would have been way down here. So you sold up here, buy over here, So it gives you a nice little buy and sell signal like that. Also, like I said, that when we were looking at the MACD, when it looked like this is the MACD line, and that was the green line we were looking at before. And like I told y'all, when it's above 0, it's showing an increasing momentum in the positive direction. When it's below, it shows an increasing in the negative direction. So let's put it back and see how that works as a sell or a buy signal. You can honestly leave it like this, but this is how the MACD would look. This is this green line. So you can use the MACD, which is this green line, as a buy signal when it crosses this 0, right? Because remember, that means that it's a increasing momentum in whichever direction. If it's positive, in the positive direction. If it's negative, in the negative direction. So cross here. If you align that up here, that's the buy signal. Let me go ahead and do vertical line. Cross, that's a buy signal there. Cross, back down, sell signal here. So you would have, I wish it went all the way up. From this point to this point, you would have made a pretty good return on that, just off of using the cross in the center line as a buy or sell signal. Also, there's one more way to see a trend ensuing. This is called divergence. So as you can see here, we got a lower low, right? At this point, it's not following the trend of the graph. The line is pretty even. A perfect divergence would actually show a higher high, right? So it might look like this, but in this case, it's pretty flat. It's definitely not going the same trend as the price shown above. But when that happens, you just look for the next crossover. At this point, it would be here, and that's the breakout. That's the breakout here. Boom, price breakout. So those are a few ways that you can look at the moving average and try to find some signals, buy or sell signals. And what I would do is I would just try to use this along with other indicators or methods, and try to find your way of trading, because any one of them could work. You just need to find what you're most comfortable with. But to go back over this MACD, the green line here is the MACD line. The red line is your signal line. You have a couple crossover techniques. The signal crossover, where the line crosses, the green line crosses the red, or the MACD line crosses the signal line. You also have another indicator where the MACD crosses the 0 line, or the center line, and then you also got your divergence, right? Just try to keep in mind that this should not be the single way you trade. You should try to find other methods and try to find just the best way that you can trade. So yeah, that's moving average, convergence, and divergence. Stay tuned. We got some more videos coming. You like, comment, and subscribe. Ask questions. And stay tuned. Thanks for watching.